Welcome to the Jay Martin Show. My name is Jay Martin, and my guest today is Ronald Peter Stoferle. He is the managing partner and fund manager at Incrementum AG, and Ronnie is also the curator of the In Gold We Trust report, which, if you are even remotely curious about investing in the gold sector, is an absolute must read. And 2023's publication is coming out real quick, so be sure to check Ronnie's Twitter and website for that release. We touch on it here in the interview. I also publish a weekly newsletter, and I love writing it, and I'd love to have you join the team. There's a link right beneath this piece of content where you can do so. I preach personal sovereignty, and I believe the path towards personal sovereignty is laden with wealth creation and health optimization. You know, I may be an investor, but what I write about isn't managing money. I write about managing your mind, which without question is the most important tool in the investor's tool belt. All right, here is Ronald Stoferle. I hope you enjoy this. All right, here I am with Ronnie Stoferle. Ronnie, it's great to have you back on the show. Thanks so much for making the time.
Hey Jay, good to see you.
Good to see you. Okay, so let's start super high level macro. Ronnie, my whole life has been the era of increased globalized economies, more access to more stuff at cheaper cost. That's kind of been the theme. And if we are now departing from that era, and I believe we are, and you tell me what you think, what are the key implications in the commodities sector that strike you as most significant?
Well, I don't necessarily agree that we are leaving that development that you've described. I would say that with all those developments that we're seeing, it's being called de-dollarization, but I think it's much more than that. It's just China, India, but also obviously Brazil, Indonesia, and many other of those emerging markets that are really have vibrant economies. And we briefly chatted about your time in on Bali before, and I think if you go to these countries, you just you feel and you smell and you taste how buzzing everything is developing in those countries. And I think they now really request to some degree a seat on the big poker table, and I think they have become much more certain that actually for the strength of the world economy, they're just completely necessary. Now when we talk about Europe, for example, because that's obviously where we are based, I think politicians and also investors realized in 2022 that actually commodities aren't something bad, something that should be disregarded, something dirty. I think we're managing one uranium fund, for example. Up until 2022, basically nobody really cared about nuclear power. When it comes to energy transition and becoming more independent from Russian natural gas, I think there was a big wake-up call happening over here. So I think this whole trend is a really strong one. But when it comes to you said at the beginning, everything is usually becoming more efficient, cheaper, and so on. I mean, that's just the development of capitalism, and I don't think that those days are over. I think actually there was a great piece by Marko Papic saying that wars are it might sound I don't know how to put it, but that wars are actually something positive because there's competition happening. There's lots of research and development happening when there's actually two or more competitors coming up. So I wouldn't say that everything in the current setup is only negative, but obviously it's pretty let's say interesting out there.
Yeah, it certainly is. Okay, so and you're right. War definitely finances a lot of industries that have been starved of capital for the last 20 years, probably. I want to run through a comment I saw you make. I believe it was on Twitter. You were talking about the 3 types of gold that should be held in every investor's portfolio right now. Yellow gold being gold, black gold being oil, and white gold being lithium. Would you mind walking me through your thesis on these 3 metals and why you refer to these as the 3 types of gold right now?
Well, it's from Sultan Pozar, this analyst who used to work for Credit Suisse, and we will have an exclusive interview with him for our upcoming In Gold We Trust report. I'm really excited about that. And his notes that Sultan put out over the last couple of months were really interesting. I think that this was really the time when topics like de-dollarization, but also access to commodities, access to strategic metals really were picked up in mainstream. So Sultan made this comment about the 3 different types of gold. I think the real gold, obviously, what we're seeing in the grand scheme of things, with central bank demand, for example, picking up significantly last year. More than 1,100 tons were bought by central banks. And obviously, it's not Western central banks, but those emerging market central banks. It's no coincidence that China and Russia, that they're again now publishing their purchases, that they're showing the world, well, actually, we're increasing our gold holdings. That's all a consequence of, first of all, the sanctions against the Russians. I think every country that is somewhat critical to the United States and their policies obviously said, well, actually, if they can, with the stroke of a pen, just say, 700 billions of FX reserves are basically worthless.
Yeah.
Well, actually, perhaps I should reconsider my allocations and my positions in the US dollar space and in US treasuries. So that's one thing. And the second thing, obviously, also is that, when you're a central bank, especially in those upcoming emerging markets, you want to create trust and you wanna reduce inflation in your currency. So it's no coincidence that if you go to countries like Argentina, if you go to Turkey, for example, high inflation countries, if I go there and do presentations, well, actually, those are the times when people in the audience ask me the very, very best questions because they know everything about gold. While, if I go to let's say a mainstream conference somewhere in Frankfurt or in London, well, I'm getting the usual questions that are most of the time not really the smartest and most educated questions. So I think, those countries, for them, it's just natural to buy physical gold, not only for consumers, but also for the central banks. And we've got one large chapter in our upcoming In Gold We Trust report where we basically say, in the Western world, we should not be too arrogant, and we have to face the fact that actually the price of gold is more and more being made in Asia, in emerging markets, because this is really where the physical demand is coming from. And not only the physical demand, but also the production is predominantly happening in emerging market countries. So that's the first gold. The second gold is black gold, oil, obviously. I think, the CapEx cycle is one thing that we've been discussing for quite a while now. I think the fact that for large oil and gas companies, it's so hard to raise capital. It's so hard to find institutional investors. Obviously, that leads to the fact that, first of all, they are buying back stock. They're increasing their dividends, which is nice for shareholders, obviously, but they are somewhat reluctant to invest in new projects, to invest in expansion plans, to get also really good human resources. It's just tough because there's the zeitgeist is fossil fuels. That's a story of the past. So that creates, I think, for investors a pretty nice setup. We have seen that there seems to be some sort of a put at around $80. I think OPEC really doesn't want to see prices going lower. Now with the strategic petroleum reserves being basically exhausted, I think that's a pretty interesting setup. So definitely very, very optimistic regarding oil. And the third gold that Sultan Posa was referring to is the yellow gold, which is lithium. And obviously we have seen resource nationalism coming in big time recently with the nationalizations in Chile. I think that's something that will continue. That's a big trend. So therefore, as an investor, you have to be much more cautious when it comes to political risk. And for me, it's not just lithium. I like the nickel space a lot. I think that also obviously silver and copper should be considered as metals for the transition. And I talked to a very, very large institutional investor before, and he said, well, actually, the demographics of gold investors compared to, let's say, green metals or critical metals investors is completely different. When it comes to gold and gold mining, it's mostly, male 60, 70 year plus. When it comes to critical metals, it's much younger, more females, definitely more open regarding technology, probably driving Teslas. So it's a completely different audience, and I think that's interesting. And as I've said before, I think really we have learned quite clearly last year that those supply curves are basically going vertical in the commodity space, and if you need the stuff, you will basically pay every price. And politicians over here finally realize that commodities are the foundation of our societies and our industries. So that's definitely, it has been a big wake-up call.
So there's a couple threads I want to pull on there, Ronnie, and let's back up and start with gold, true gold in this case. Over the last 2 years, we've seen a lot of superpowers leverage whatever weapon they have access to. For the US, that's the currency, right? The world reserve currency, and they have weaponized it, as you mentioned. They essentially stroked off $700 billion of USD reserves. In response, Russia has weaponized energy as best they can. My question for you is, you mentioned China, Russia, gold imports. China's probably the largest gold importer. They are the largest gold producer, and they don't export any of it. So you could imagine the stockpiles are significant. Is that the ace up their sleeve that they could weaponize in response to the weaponization of the US dollar? And what would that compromise, or what major ripple effects might that have? Can you imagine anything like that, Ronnie?
Well, I mean, many people would refer to some sort of a revaluation of gold at some point. It can happen. Usually in times, so if you read monetary history, it can happen, and the transition from one monetary system to another monetary system and to a new currency, you need something to establish trust in the new currency. And normally that's gold. And just one example, when when the euro was introduced over here, well, actually there were advertisements, like campaigns, where they said, well, actually in the eurozone we hold more than 10,000 tons of gold, and this was being used to establish trust and confidence in the euro. So I think let's put it that way. I think if you want to play poker with the big guys, you need chips, and if you really want to do this, let's say, high stakes poker, you need probably golden chips, and it's no coincidence. The US still holds 8,000 tons. I know there's lots of rumors. I think they still got it. The eurozone holds more than 10,000 tons of gold. The IMF holds more than 3,000 tons of gold. The Russians have been piling up big time. The Chinese, we've got one article in our report where we say, well, actually, we think the central bank owns probably more than 5,000 tons. The Turkish own huge amounts of gold, Iran, the Saudis. So actually, all the big and important players, they've got significant amounts of gold. So, if we talk about China, well, actually, at the end of 2022, they held like 3.3 trillion in total reserves. So in that stash, there were like 2,000 tons of gold officially.
Okay.
So sounds pretty impressive. But if you look at Germany, for example, if you look at France, at Italy, Russia, so even though their GDP is significantly smaller than China's, they hold more gold. And France, for example, it's like a 2.6 trillion economy, while China is 15 trillion. And France owns more gold than China. So, and at least for now, I think the French, they don't have to worry that their reserves are being frozen. So is there a strong case for China really soaking up every ounce that they can get? Definitely. If I would be in charge of managing the Chinese foreign reserves, I mean, I would buy everything, and that's actually what they're doing. So they're the largest producer, as you rightly said, and they are the largest importer of gold. So I think at some point there will be, let's say, a renegotiation of our monetary system. Now, the Chinese, they do, I think Kevin Rudd said that, the former Australian Prime Minister, he said the Chinese do actually fear three things. It's the American military, the US dollar and the sanctions, and the US semiconductor space. So therefore, I think it's really, you don't have to be a doomsday sayer to say, well, actually, with the stuff that is going on between, let's say, the US and the Western world in general versus China, and more countries actually joining Team China, it is something definitely that is pretty frightening. And I think we're writing about this de-dollarization topic for many years already, I think for 8 years. And now it's really becoming mainstream. So it was on Fox News. I mean, Luke Roman was on Fox News. Neil Ferguson had a piece on Bloomberg recently. I think it is happening, but I think that people mix up, and there's a huge difference between a reserve currency and a trade currency. And I think the Chinese, they now more and more want to make deals with the renminbi becoming a trade currency, but I think to become a reserve currency, we're still far away from that, because they would have to open their capital accounts. They would have to make basically their currency free trading, and I don't see that this is going to happen anytime soon.
Okay, yeah, I really appreciate you adding context to euro gold holdings relative to China, US relative to China. It's important context, and then distinguishing between a reserve currency and a trade currency, two super different things. One more thread I want to pull on regarding some of your comments about the lithium or just base metal space. You spoke about the demographic differences between gold investors and critical metal investors. And I would say that maybe that says more about gold investors than anything else, because base metals, critical metals seem to be attracting more of a generalist crowd. I mean, then you get a larger slice of the pie, where gold is still a very niche holding for most people. Do you think that's changing, Ronnie? You know, as topics like de-dollarization hit platforms like Fox News, people might start asking questions they weren't asking 10 years ago, like why gold? Maybe. But do you think so? And do you see that sentiment shifting as well?
To be honest, Jay, I mean, we're having inflation running at roughly 10%, and people still care much more about, I don't know, the Kardashians than about our monetary system and what's actually going on in our monetary system and what the root causes are for the mess that we're in. So I think we're seeing it with all the elections currently, that, you know, this polarization is happening, yeah, and it's I think that inflation is clearly one of the main drivers of this polarization to the very right and to the very left. Mm-hmm. That's a trend that we're seeing. Unfortunately, I think it's you know, all those you know, subsidies that we're seeing and price controls and stuff like that. I mean, you don't have to be a grand historian or an economist to understand that it just doesn't really work. It's just fighting the symptoms and not really the root causes of the mess we're in. I think when we talk about the younger generation, and I'm not sure, I think we don't qualify for the young generation anymore. Jay, I think we're somewhere in the middle.
Breaks my heart, man.
But if I talk to, like, you know, to young kids, you know, like in their 20s, I think with Bitcoin, for example, there is quite a movement happening. I see many people that, through discovering crypto, through learning their lessons, with all those scams and you know, all those things happening in the crypto space, then at some point discover Bitcoin, and become Bitcoin maximalists, and then for them it's understanding gold is much more natural. Like, for me, understanding Bitcoin at the very beginning with the stock to flow ratio, which is, from my point of view, the main reason why I see utility in Bitcoin. This is definitely a very positive development that I'm seeing. Yeah. So there is something happening, but still, you know, as those topics are really going mainstream now, as, you know, really people can really feel what inflation does to their purchasing power. It is somewhat sad to me that nobody is really asking about the root causes, and that politicians obviously only try to you know, cover the symptoms, and that there's probably it's a bit too I don't know, too challenging to really consider what money is, and too much work, too much effort that you would have to put in to really understand what money is, what money does. But I think, you know, having read a book about the German hyperinflation recently, and I've read many books about that, I thought it was really staggering when the author said, it's by Frank Stocker. He put it out because we've got 100 years of hyperinflation from the Weimar hyperinflation, and he said, like, at those days when prices really picked up and were going parabolic, so like in the very last stage of the hyperinflation, all the most important economists, politicians, but also, you know, investors that were in the previous cycle very successful, they all blamed obviously you know, foreign currency speculators They blamed other countries. They blamed basically everything, but not the printing presses for the hyperinflation. And this is something that I would see as well. If I talk to mainstream economists, and I have to say I'm not a trained economist. I did a finance degree and business administration, and I'm a practitioner. I'm an investor. But if I talk to mainstream economists, for them, they're in the team transitory. They see that well, actually, it's greedflation as it's being called. So now actually companies are responsible for high inflation numbers. Everybody is responsible, but central banks. And I unfortunately see a very big similarity in that.
Yeah, and you mentioned that. So let's segue from that, therefore, Ronnie, because previously they hit and record. One of the things you mentioned was a narrative that the public or media is misunderstanding are the causes of inflation, real causes of inflation, which you just touched on. So thanks for that. Speculate further into the future, though. When we're hearing a lot about the inflation narrative, we're also hearing a lot about the severity of the potential recession that might be around the corner. Soft landing, hard landing, all this jargon getting passed back and forth. What's your take, thinking US, European economy through 2024?
Well, I'm definitely not in the team soft landing. From my point of view, and that's going to be a very, very big chapter in our upcoming Gold with Trust report, and I can already tell you the title of the report will be Showdown, because we're seeing this showdown between central bankers and market, not only financial markets but also the economy. We're seeing this showdown when it comes to geopolitics, and we're seeing this showdown in physical gold markets. So I think if we talk macro, I mean, it's obvious we've seen an inflation shock, then a rate shock. I think nobody 1 year ago would have forecasted 5% interest rates. Nobody. I don't know any investor, strategist, or astrologist who make that call. I think the next shock will be the recession shock. And just have a look at the ISM, have a look at the leading economic indicator, which is, from my point of view, one of the most reliable indicators out there. Have a look at earnings, how they're developing. Have a look at iron ore prices. Have a look at house prices. From my point of view, it's crystal clear that we are moving into a recessionary environment. Now, the big question is, why isn't the recession already here? I think the answer is clearly fiscal policy. And this has been the leitmotif of one of our previous reports that we called monetary climate change, when we said, well, actually, we should focus less on what central bankers are doing and more on what fiscal policy is doing. And with, the Inflation Reduction Act in the United States, with all sorts of different legislations over here in Europe, but also in China, I think it's pretty clear that fiscal policy is taking over now. And fiscal policy, compared to traditional central bank policies, like on the rate side, but also quantitative easing and so on, fiscal policy works much faster and much more direct than monetary policy. So this is clearly happening, and I think we've got the debt ceiling discussions and this whole theater coming up. I think the US basically used their TGA to come over that period where actually they're running low on cash. But I think it's gonna be pretty interesting over the next couple of weeks. We know that there's a big election coming up in the United States. I don't think that the Democrats really want to go into an election year when the US economy is tanking, and when the when unemployment rates start really soaring. So this is kind of the interplay that we're seeing at the moment. From my point of view, at the end of this year, interest rates will be significantly lower. And we have already seen so many consequences of those really historic rate hikes. I mean, it's been a huge move on the rate side, and I just don't see that it's cannot have any effects. And we saw it, we saw it in the UK, for example. The UK gilts market almost broke down. We saw it with all those scams like FTX in the crypto space. That's of course a consequence of money being too cheap and too much liquidity in the market. We saw it with SVB, which is it was a mismanaged bank, obviously, but it also has tech companies are long duration assets. So I think those are all signs. Also, the Blackstone REIT, for example, all signs that actually we're moving into a recession. The Federal Reserve still wants to pretend that they're super hawkish. I think that Jay Powell, we have to say, he did a good job of re-establishing confidence in the Federal Reserve, and his whole references to Paul Volcker. I mean, that's he would deserve an Academy Award for that. I think he really created that narrative pretty well. But then at the end, I think there's just no way that we will, I think that, let's put it that way, the damage has already been done. And I once called that in a podcast with Kevin Muir, I called it the tequila theory of money, where at the end, at the beginning, having some tequila shots, it's fun, but then afterwards you wake up and you've got no idea what actually happened, because you completely underestimate the time lags that are involved. So I think the Federal Reserve is still looking into the rear view mirror. And all those leading indicators, like, as I said, the leading economic indicator, iron ore prices, for example, housing market, and also the rates market itself, are basically telling us that a recession is around the corner.
Now, how do you incorporate that into your base metals thesis? And maybe it comes down to time horizon and duration of investment, but would that not be a conflict with a bullish outlook on the base metal sector? And if so, how do you process that, Ronnie?
Yeah, I think, great question. Well, obviously, recessions aren't a great environment to be long commodities, and especially, copper, where it's always said that it's got a PhD in economics, other base metals and so on. Definitely not. We for this upcoming report, we've got a pretty interesting chapter where we analyze how gold, silver, and then also base metals, how they react and how they work in different stages of a recession. Because normally when the recession is officially announced, the worst is already over. So as a little teaser, gold works really well in early stages of a recession. Then silver picks up, and then only later during the stage of the recession, commodities really start outperforming the precious metals, and especially gold. Why? Because of course, what happens if politicians and the central bankers realize that a recession is coming? Well, interest rates are being lowered, and there's fiscal stimulus. That's the playbook, and I don't see that if we hit a recession, and especially in an election year, that this playbook will not be used again. So therefore, I think that for base metals for the time being, I think they're actually holding up pretty well, given those headwinds that we're seeing. On the other hand, it's also, of course, a consequence of, first of all, a pretty weak US dollar. And then on the other hand, also the Chinese really opening up after more than 2 years of very, very extreme lockdowns. So those forces are pushing against each other at the moment. Long story short, I would say, it's probably too early to go all in the commodities trade, especially the base metals. I think that for gold, I think it's kind of sniffing out what's coming. It's already telling us that the pivot is around the corner, and I would see like a little bit similarly like 2019 and 2020. So end of 2018, we saw the last big pivot. What did gold actually do afterwards? It had 2 tremendous years. It was up 19% in 2019, and it was up 25% in 2020. So can that happen again? I would say yes, definitely. And I just attended and spoke at a really big conference in Zurich, the Denver Gold European Forum. Fabulous conference. But I have to tell you, gold was trading at roughly 2,000, and I didn't see too much excitement, not from the participants, the investors, but especially not from the mining companies. So imagine where, Bitcoin is trading close to all-time highs. How big would such a conference be, and how crazy would those parties be like? So compared to that, I think, that this kind of muted sentiment makes me pretty confident going forward. We came out, we were asked, what is our price target for the end of the year? We said something around 2,300, 2,500, and people say, well, that's really bullish. So why not? I mean, definitely positive with the pivot around the corner, with central banks buying really like crazy. And I think this is really going to be one of the largest drivers on the gold demand side. So I think the fact that gold is trading very close to all-time highs in US dollar terms, that's important, because in every other currency, gold made lots of new all-time highs already over the last couple of quarters, but everybody's just staring at the dollar price. But given this kind of sentiment where also gold ETFs don't see any big inflows, and gold ETFs are, from my point of view, they're an indicator for Western financial market investors. And they're kind of the marginal investors, I would say. That's a pretty good setup from my point of view.
Yeah, okay, got it. Now, last question that I wanted to ask you, Ronnie. The gold versus Bitcoin debate is still as popular as ever online. It doesn't make any sense to me. I could share why I think so, but I'm more interested in your take, because you invest in both, you hold both. Could you explain your rationale behind each asset for my audience? I think it would be great to hear, to get away from the this versus that narrative that I think is quite misleading.
Well, Jay, I discovered Bitcoin in 2011, I think, and we bought quite a lot, sold it too early, the majority of that, and my wife still keeps asking me why did you sell it at 2,000? I say, well, I actually bought it, I think, around $100, so it was pretty good. In hindsight, it was way too early. However, I think that, for me, it's a new monetary technology. It's some sort of a technological upgrade of our monetary infrastructure. Obviously, the track record is significantly shorter than for gold, which is around for more than 5,000 years, and basically preserved purchasing power through every hyperinflation, through every currency reform. But I think the combination of both totally makes sense. So we've got, for example, one fund where we've got 75% physical gold and 25% Bitcoin with an options overlay. Interestingly, there's basically no correlation between gold and Bitcoin, which makes a rebalancing even more attractive. And I think that, if you understand gold and if you like a free markets guy like us, I think, competition is something good, something positive. And why not competition in currencies? So do I think that gold will preserve my purchasing power compared to the euro? Definitely. Do I think that Bitcoin will do the job over the next 5 to 10 years? Absolutely. So I think that many, which is really interesting, and I only found out about that a couple of years ago. If you really read the fine print of Bitcoin, many people forget or never saw that there's a newspaper headline buried in the Genesis block, and that refers to the bailout by, I think it was Northern Rock. Many people tend to forget that Satoshi Nakamoto's chosen birthday, what was for Bitcoin, was the 5th of April, which is the same day when FDR passed executive order. I think it was 6,102, basically making gold illegal in America. So I think that Satoshi Nakamoto, whoever it was, he clearly understood gold. He understood how our currency system works. He understood the stock to flow ratio, most importantly. And therefore, I think I know that it's a highly emotional topic. And to be honest, Jay, we got lots of criticism from the gold community. We got lots of criticism from the Bitcoin community, where we say, "Wow, how gold is a thing of the past." I think it's a prudent way to combine both. It's both are kind of sound money technologies. If Bitcoin will really continue to be and it stood the stress tests of the past pretty well, I think, of course, the upside is significantly larger. But of course, I mean, it's much more risky. So why not combine the both? That's at least our approach.
Okay. I love that. Thank you, Ronnie. I want to touch on the In Gold We Trust report. I know you're working on that right now and have been for a couple of months. For context, how many downloads did last year's edition get? How many downloads did last year's In Gold We Trust report get?
Well, on our webpage, we had a couple of 100,000 and altogether. So there was a media company analyzing it and they said roughly 2 million readers. Because we make this report available for free everywhere. We've got lots of media corporations, lots of people, just tweeting out, read the new In Gold We Trust report, and then, download numbers are just exploding. So it is probably the most widely followed publication on gold. We really want to make a sober case for gold and just, not, how do you say in English, not to do preaching to the choir, but rather also inform like people who don't know too much about gold and make the case why gold works from a portfolio point of view. And it doesn't have to be like 70% gold, but 5-10% gold really changes the characteristics of your portfolio. So that's really important for us. And it also has to be to some degree entertaining. It has to be fun. So we really want to make it a good, interesting read, because actually we're getting the most valuable thing from our readers, which is their time. So we want our readers, our customers, basically afterwards, after reading the report, say, well, actually this was well invested time. I learned something. I got new thoughts. And therefore it's really, I think that people can really feel and tell that there's lots of passion and lots of energy, lots of capital flowing into this In Gold We Trust report. It's every year, it's exhausting. I told you before, I usually get up at 5 a.m. and I work till 9 p.m. So it's not exactly the work-life balance that people nowadays want to see, but I don't care about work-life balance. I just love the work that I'm doing.
Yeah, I love that. And when does 2023's edition come out? When can we expect that?
24th of May is the big date. So yeah.
May 24th. And obviously it'll be available to anybody following you on Twitter at Ron Stoferle. We'll include that link. Which website should we send them to, Ronnie?
It's ingoldwetrust.report.
Ingoldwetrust.report, May 24th.
Yeah.
Okay.
Available in English, German. We've got the compact version in Spanish, and we've also got an edition published in Mandarin. So I will go to China again this year and see what's happening in the Chinese gold market again.
Very cool. All right. 2 million downloads is the number to beat for 2023. All right. Look, Ronnie, I appreciate your time. Thanks so much for coming back on the show.
Thank you very much, Jay. All the best, and see you soon. Bye.
All right.